The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rose.
Welcome, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we have the Dow Industrials down 30. You get the Nasdaq up 3. The S&Ps are up a couple of bucks. We got gold off 20 bucks. We do want to thank all the tigers and tigresses for growling and prowling with us with the Nadex competition, folks. It was an awesome competition. From top to bottom, it was pretty amazing, actually, with 25,000 starting money for everyone out there, funny money. The top winner was 49,000, and the first 20, everyone was in the money, big time. It goes from 49,000, you get 49, 45, 30, 28, 27, 27, 19, 15, 14, all the way down to 5,000. We do appreciate you participating in it. It was no doubt it was a great contest. And if you haven't test drove the Nadex platform, folks, get over to our website. You can test drive it absolutely free. You'll see that your trade is your stop, which is absolutely amazing. No two ways about that. And all you are looking for is you're really looking just for volatility, which we've definitely had. What's going on, Darrell?
Hey, man, how's it going?
Going great, man. You having a good day out there?
Yeah, having a great day. So that was a great contest last week, man.
Yeah, it certainly was. It was
people blowing it out. I mean, like, and not just like once. I mean, there was guys like up there, you know, making double digits on their, or five digits on their account.
No, there was
over doubling their account, and you're talking like on a daily basis they were staying in the top 10. It wasn't just like fluke by chance. It was really impressive.
It really is. And folks, what does happen, which is pretty cool. We get to analyze them, and and as Darrell said, there is some real consistency there. And I definitely knew who I'd give money to and I wouldn't give money to.
Yeah, exactly. The guys that were staying up there, you could see the fluctuation versus the guys that just popped up out of nowhere, and the guys that would fly up.
And it was consistent.
Make 10, lose 10, make 10. Yeah,
you know, overall it was consistent, which was really cool. You know. And a lot of it, folks, really has to do with patience. It has to do with patience to sit there to wait to put on the trade. They put on the trade, and as you know, we've talked about on a continual basis, you know, you almost can, I mean, okay, we all are prejudiced to our own systems, but the reality has to do with your money management. That's what it really comes down to. You know,
it's money management,
is.
Patience, you know, because you get that little, you know, trigger happy finger, right, that wants the trade because you're waiting on the trade and you get tired and you're just watching the charts and you're bored. You know, it's called Netflix and Xbox. You know, do something else to keep you busy while you're waiting.
Oh, that's funny.
And I have Netflix up, man. If I'm really bored and I'm waiting, I'll watch something.
You know, that's pretty good, man. That's smart. Okay.
You stare at the chart, man. It starts mind washing you, and it's like click me, you know.
Oh,
so you
listen, man.
To get your mind off of
it. That's a fact. Hey, Darrell, come here. Get over here. Come on over here right now.
Don't you want to pull the trigger?
Yeah,
exactly. Fucking an Adam Sandler movie or something.
But, seriously, man, there's no doubt about that. There's absolutely no doubt about that.
But then the money management's huge. You know, I mean, the things that I hear from traders that I talk to, you know, and I talk to ones that are knocking it out of the park. I talk to ones that are like, I just blew up my account, you know, and a lot of times they'll go like, oh, my account just got like whatever, and I'm like, so what was your risk management like? That's always my first question.
Right.
And I'm like, okay, so we now know that was too much because it's impossible to have an absolutely, especially on Nadex, to have an absolutely horrible day unless you're risking too much.
Right. And, okay.
It's not like you can get some margin calls in the black
pasture. Because, folks, what Darrell's bringing up now, this is really important to understand. Okay, the blowing up of accounts. You know, if you've traded futures, you know they can blow up in a second. And I can tell you, not most folks. When you first trade futures, your account will blow up. So if you're going to do a trade futures, make sure you only put $3, $4, $5 grand into it, or whatever you're going to put into it, or 1,000, whatever, because it's going to blow up. Okay. It just happens. Yep. Now, equity accounts, you know, there's plenty of equity accounts that blow up, and it always has to do with being over your head. there's no
100%.
doubt inside a Nadex account, the only way you're going to blow up a Nadex account is that it's too easy. That you say, as we were talking about, say, oh, hold it. No, you know, I'm going to hit this one, and this one, okay? Because if you, I guess what it has to do with all of the above, if you keep the money management in place, it's going to be a lot harder. It's particularly a lot harder inside the Nadex account because you can put up so little money on a continual basis to get used to how markets move, number one. And if you do that, the longevity is huge. Now, where the problem comes in is that when you do it, and you'll see this when you try the, you know, your funny money account, you'll see it and say, whoa, hold it. You know, like when you hear Darrell, he talks in increments all the time of, you know, I put up $50, $30, $20. And when you first hear that, it's $50. And if you're used to trading, that's like, what are you kidding me?
What's the point?
Yeah, what's the point? But it's a huge point, folks. And so what happens on so the good side of that is that you can put up $50. The bad side of that, if you're actually in there trading, you say, well, you're so used to putting up thousands of dollars. Yeah, put up 500, put up 5,000. It depends where your perception is. And that's insane, okay? So, you know, take it for...
Well, you know, you're trading spot FX or even, you know, spot futures, and you go in, or FX, and you're used to, you know, putting up, let's say on a watt, you're used to putting up $3,000.
Sure.
All of a sudden, you can put up, you know, a few hundred and control 100,000 units currency. And so you're like, well, that's not really that big of a deal.
That's right.
You know,
and it really isn't that big of a deal, but there's no reason to do it.
Yeah, and so you go in and people get all, and the thing is, people blow up their futures accounts because of those very reasons.
Right.
They go in and, you know, I know people all the time are going in, they're trading futures accounts, they have $3,000 or $4,000 or $2,000 in there, okay? And, I mean, they're trading like a gold contract. And forgetting the fact, you know, of how much it's worth.
Right.
And it's like, do you know, what is your real risk management? Are you looking at your percentages?
That's right.
Just because you can trade it doesn't mean you should trade it.
That's
you
right.
know, more leverage does not mean you should use more risk. It just means it empowers you to do more with less money. But it doesn't mean you should be risking more money. So you're just able to use more money. And people confuse the two. They come in and they're like, oh, more leverage, man. That means I can go in and make it. And I want to, because, well, you know, we were both there. We've all been there, where you want to quit that day job. You know what I'm saying?
So what? Yeah.
And so you want to be a millionaire overnight, and you're not thinking about where you want to be in 12 months. You're thinking about where you want to go in and tell that guy to shove it, and you can't because you know you got to get that paycheck, and so you're trying to make that paycheck so you can quit as soon as possible.
That's funny.
But if you can learn to make money consistently in the market, just a little bit every day, the compounding effect is insane.
Yeah.
And, you know, like one of the things that, you know, I talk to traders about is what I call the 5% rule, okay?
Right.
And I go in, and my goal is to make 5% a day when I trade, which it sounds insane to most investors and traders. But if you think about that, that's $50 on $1,000.
Sure.
Okay, that's a $50 trade, okay?
Right.
Or it's three $15 trades.
Right.
Which doesn't sound like anything, okay? But three $15 or $17 trades, whatever. So that's making $50 on 1,000. So if I'm going in, I can make 3 trades where I make, you know, $17 over the course of an entire day. I've made 5%. And I don't compound daily. I'll compound monthly. And what you do is you let it build up, and then, you know, then the next month, then you don't increase your number of trades, which is another thing people do. They try to trade. They think making more money means making 50 more trades. You just increase your contracts, but you keep your risk management the same. But on the same note, and this is huge, on the same note, if you lose 5%, you got to stop.
Right.
And I know 5% sounds so huge, but for a day trader, that's not really a massive number in itself.
Right.
And so either they'll risk too little that there's no way they're going to get to that, or they'll risk so much like they're just going to blow their account out. And it's amazing to me. But if you can go in and have that mindset, and so like on Nadex, one of the things I talk about is, let's say you have a 5% a day as your max loss.
Yes.
Okay. Well, you
didn't
about
really have to work at that to make a. Go ahead. But
yeah. So let's say you have a $3,000 account.
Right.
Okay. That gives you a decent amount of money to go in and trade with.
Sure.
And I try to do a divided by 6 rule.
Okay.
Okay. So, you know, if I'm going in and I'm doing, you know, 3,000, I do that times, you know, 5%. It's $150. Divide that by 6. That's $25 a trade. Okay.
Yes.
Which is so like minuscule. But again, if you were able to make, now you may make more than $25 on a single trade. We're just saying that's the max risk.
Sure.
Okay. And which means I may end up buying a trade for 50 and getting out at 25. Okay.
That's right.
But by doing that, so 6,000 would give you a $50, per trade risk. But there's guys going in with futures accounts with $3,000 in them, and they're risking a whole lot more than $25 because that's, what is that, 2 ticks on the S&P?
Oh, yeah.
Okay? And that's why they blow their account out. And I know I had one guy who was like, well, I tried to do that, but he's like, I lost all the money in my first trade. I'm like, no, not 5% a trade, 5% a day. And it's like, well, my account's too big because he was trading futures.
Yeah.
And I'm like, this is why you need to go trade Nadex. You could actually trade the spreads.
Right.
You could have a 25-tick stop loss.
Right.
Okay? Trade the Russell, trade gold, trade oil, trade the S&P, trade the euro dollar, whatever you like to trade with a 25-tick stop loss. You just get out of the trade when it goes down 25 ticks.
Sure.
And you can trade with good risk management because you don't have to do a whole gold contract. You can do a tenth of one.
Right.
And so his risk management problem wasn't just he was trying to be disciplined. He said, I'll only risk 5%. But his risk management problem was he didn't have enough money in his account to actually allow him to take more than one trade. Because if he lost one trade, he was down and out. If he won one, lost one, he was down and out. And so by going over to Nadex and trading the Nadex spreads, he was able actually to have better risk management because he could trade smaller position sizes that were appropriate for his account.
It's huge. Yeah, there's no doubt about that. Because what happens, folks, is that it's pretty hard if you're spreading out 6 a day. It's pretty hard to be wrong on all 6. I mean,
it
6
can
in
happen,
a row,
but
it's gonna be,
But I mean, you could be right 2, wrong 3, right 1. I mean, you're still basically right at break even. And that's if you only 1-to-1. If you actually have a few running trades,
that's right,
then you'll be ahead. If you have a few behind, you won't be quite break even, but your account's not going to be destroyed if we use good risk management. And the number one goal in trading is survival. It's not getting rich because you can't get rich until you survive.
That's a fact. There's no 2 ways about it. And when we talk gold out here, folks, okay, as one of the Tigers said in the den, gold's doing its thing on a Friday, and it certainly is. And it's going to get interesting. And what's going to get really interesting about the equities is that the equities had an extraordinary run, wide price spread, accelerated volume, and I'm watching a few of them right now, and only the gold equities can do this, folks. They're going to blow people's minds again. Okay, they absolutely are, man, because what they're going to do, and I've seen this before. See, what happened is this. The spike on Wednesday did not get over a swing point. So the way this is setting up, man, is these things are going to not only give back what they were up, they're going to go a little bit lower and just blow everyone's mind. And they're a buy, by the way. Not right now, but they're going to be a buy. But what's going to happen is that we're going to be the only ones that are buying them because it's going to be one of these deals again that people just didn't have patience, and it's amazing, man. It's those stocks have a personality all by themselves, man. And it's like they went to the deviant school of personalities, man. You stay right there, all you Tigers and Tigers. This is Darrell Martin, Tom O'Brien. We appreciate you growling and prowling with us. Coming right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. We had the Dow right now down 23. Nasdaq is up 7. S&P's are flat. We get gold down 20. You get platinum off 16. And we're talking about the Nadex platform, folks. And I'm in Mr. Darrell Martin. I believe I'm looking at his scanner right now. And, folks, what you can do is this, is that once you get an account open over at Nadex, and you can open an account for as little as $100, you want to test drive Darrell's scanner because it's more than just a scanner. Actually, can you explain exactly what you have here, Darrell?
Yeah, basically what it's doing is it's not, like I said, it's not just a scanner. What it's doing is pulling all the information live from the Nadex exchange. And doing so, it's also doing all the math for you. What it's doing is it's helping you find the best trade.
Right.
Yeah, because I mean, you can literally have over 100 contracts in front of your face, you know, that you're trying to figure out, I want to buy. Like right now, I'm looking at the S&P, okay?
Right.
And I'm looking at the Russell, I'm looking at the Dow. I'm planning on there being a gap fill.
Okay.
Okay? So, you know, I love those gap fills. And market's heading back up, starting to look like it's going to hit most of the indices over here. And so let's see here. I can just sort of show this on the screen for you. Basically, we have all the settlement prices right here. You got Nasdaq's already. I mean, it didn't really have a gap. It's just bouncing right off of it. It's got a lot of strength. I think it's leading the way right now.
Okay.
And But you got the S&P, you got the Russell, and you have the Dow all down right now, looking like they might head up. I'm starting to see some market strength in them. The BMI, the Broad Market Index,
Yes.
is starting to head north as well. So starting to look like it might want to fill that gap. And so the first thing I do is I go in and I go, you know what, I want to check out, see if there's any possible trades. I'm just getting ready for it. Haven't hit the button yet.
Okay.
But and so I'm looking at, okay, what was yesterday's, closing price? Basically, it was right around 17.17 on the S&P.
Okay.
And so I want to have till the end of the day to be right. I don't want to be babysitting this thing all day long. And so what I do is I go in, I can do this on the binaries or the spreads. And so if I go over on the binaries, I'm going to put like a $5 to $35 risk per single contract.
Okay.
Okay. And then today's Friday, so I went to a 415. Well, that means I got dailies and weeklies that I can look at. Okay,
Right.
so I click daily and weekly because I don't need intraday right now. And then I think it's going to go up, so I click buy. And that's going to basically, these are the only choices that qualify. And it shows me, notice the daily and the weekly
Okay.
right here. And I go, well, where's 17? Oh, there it is, 17.17. That's what I'm targeting.
Right.
Okay. And so if I like that contract, I just click on the button. Boom, it opens up the ticket for me immediately. And it also, we added the feature where it says live or demo, so you don't accidentally make a mistake, because you can do either one in here.
Right.
And so let's say, I'll throw one on right now, because, I'm expecting this to go, but I'm not going to throw a whole bunch on at the moment yet. But I put one in here, and so I place that order, and then I can go in and I can take profit when it hits the strike.
Right.
Which right now we're not talking about a great risk reward. That's why I'm still watching.
Yes.
Because when I get out, basically the binary. One of the rules about binaries. And
Okay.
There's gambling with them and there's trading them. Okay.
Yeah.
And I like to trade them.
Okay.
And you can get out of them one before expiration.
Yes.
Okay. It's not an over/under bet. Okay, that would be gambling.
Yep.
All right. Also, it's knowing what the edge is, and there's one edge that I've discovered in the binaries on Nadex.
Okay.
And that edge is that when the market is at the same price as the strike.
Okay.
Okay? So like when the S&P is at 17.17,
Yes.
then the binary would be worth $50.
Okay.
Because there's a 50-50 probability it'll be there at expiration.
Okay.
Like over or under that price. So, you got to add in a little bit of spread. So maybe you're looking at like, say, 53.47.
Yes.
Okay? But by knowing that whether there are 23 hours, 5 days, or
That's
3
right.
minutes, that it'll be at 50, all the other variables can change significantly based on implied volatility, based on time to expiration.
Yeah.
And now we can figure out what those numbers are pretty easily.
Okay.
But those numbers can change. But off the top of my head, without doing anything fantastical in math, I know it'll be worth $50. So if I can buy this thing somewhere around $25, okay,
Right.
then I know I have a trade where I could buy at 25, sell it basically 50, and have a 1-to-1 risk reward with no stop loss. And I have all day for that gap to fill and make 100% return on my trade.
That's interesting, man.
And I did this yesterday
We're
as
going to
well.
have to go through this again, just so everyone understands it. This is really interesting. No, so you're saying that when the binary gets to the actual price, so what happens there, folks, is that
when the underlying gets to the binary, yeah.
when it gets to the binary, that the cost of the binary would be 1/2 of what you could collect if, in fact, you're over it, right?
Exactly, yeah.
Ooh, that's a trip, man. Okay.
So you know that price, and you can start using that for all sorts of strategies.
No, big time. You stay right there. Darrell Martin, Tom O'Brien, appreciate you growling and prowling with us out here, folks. Right now, let's see. We got a beautiful Friday happening going into the weekend. Dow's down 26, Nasdaq is up 6, S&Ps are off fractionally. Dow and I are going to be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. And they're doing their deal, folks. They're taking a whack at gold, and gold, folks, and those gold equities are going to be the equities that just keep on giving, baby. It's amazing. Bottom line is that you're going to see them basically break those lows before they had to spike up. And guess what? The lineup, the setup is setting up really sweet in a big way. Particularly, and this is the sickest thing about that whole business, particularly because of that spike, folks. Amazing, man. So gold's down 27 right now at 1341, but the setup is there. We're talking with our man, Mr. Darrell Martin. We got his analyzer right up on the screen right now. Okay, so that's that binary, man. I'm gonna check that out, man. I love that whole setup. How you just went through that, man. That's pretty amazing, actually.
Yeah, it's one of those things like you go in and because those prices are always fluctuating, so it can sort of make it hard to trade.
That's right.
Now, one thing you can do on the binary scanners, you can go in and you can say buy side simulation price, and I can say what would happen if the S&P ran up to 1717, 0.5, which was the actual settlement. even though the last may have been 17.17, but the actual settlement by the CME 17.17.5.
Okay.
And it'll tell me what it'll be worth.
Sweet.
And I can actually see my risk reward on the trade. Now, one thing that's always important to use caution on this is if you closed it when it hit that price. It's not, of course, at close. And it's live. So it's based on time right now, implied volatility right now, everything right now, what would it be worth? And so I can say, you know what, if I went in and I bought this, like this 1720 at $20, it'd be worth $32.50. I'd basically make a 0.62 return on my trade.
Yes.
62% return there on my trade. And 68. This one's 83%, but it's further away, so time can have more of an effect if it takes a while to get there.
Yep.
And we're starting to see. I mean, it's moving up. We're only down 2.5 points now, so the gaps are about to fill. But I love gap fill trades. I posted over there in the den too, the actual screenshot there.
Yes.
The ones I did yesterday. Let me pull that up. What I posted over there in the den. And so you can see right here, I went in, and we had that massive run up after the FOMC, on Wednesday.
Right.
And we also had, I look at seasonality. We had a seasonal down day yesterday.
Okay.
And then I'm looking at, time and sales, order flow, market noise, all that's coming up. And I see it, I'm like, okay, this thing's going to drop. And, but of course, that's that's me reading the market.
Sure.
And I want to do that with, as good a risk management as possible, like we were talking about, right? And so I went in and I sold 10 binaries at 17.16 for $78. And I sent an order to buy them back at 57 because really the settlement was a little bit higher than 17.16. And put them in. And it took about 2 hours for them to close.
Okay.
But it did close. And I had till 4:15. I had all day.
Wow.
Okay. And but I was only risking, if I sold for 78, when you sell, your sell price is your profit potential. Your risk is $100 minus that.
Right.
Okay, when you buy, your risk is your price. So they're inverted. So when I sold for 78, I could make 78. I was risking 22, and so I made $21. So about 1-to-1 on the trade. But I put it on. I set my thing. I walk away. It can take care of itself, and it's pretty sweet. So it's a very, very cool way to play gap fills. And I mean, I know you've played them. We've all played them. But the risk in gap fills is you got to set a stop loss, and you can easily get stopped out before the thing does fill.
Absolutely.
So with this, you don't have to set a stop loss, and you can still play those high probability gap fill trades. And the thing about gap fills, the reason they work, you don't do them on things that trade all night, like oil and gold and FX.
Right.
But on indices, even though yes, the futures are trading all night, as you know, obviously the stocks are not trading all night.
Right.
And so there's all these limit orders in between that gap that never got filled. And the market loves to fill orders. It exists to fill orders because that's the easy money, where the order's at. And so it'll go back down to fill those limit orders. And you can even look at the chart yesterday on the S&P, and you'll see how it went down. Let me pull it up real quick. I was looking at gold too. It's down like 1.5 deviations right now. But let me pull up the S&P over here, and you can really notice how whenever it was opening up, that look at this. We'll zoom in on it and look at yesterday. And we spent a ton of time. I also got another nice little sell there on the S&P.
Right.
But we spent
and if you're in your car right now, folks, what we're looking at in the West Coast, if you're in your car going to work, which I know plenty are, what we're looking at is that it was a gap down. Darrell was saying, okay, it was going all the way up to fill that gap, and of course that's what we are seeing.
And then yesterday it was up like half a deviation.
Yes.
Okay, went up to half a deviation. It bounced off that. It was heading on down.
Yep.
Market opens like right here, and then it just starts moving down. And look how on that settlement, look how it just bounces off of it.
Right.
I mean, for hours. It's just playing on the settlement price.
Right.
And that's because there's all these orders right there. And so the market's just chilling out, and then it comes off of it, and it comes back up to where? Right back to settlement.
Exactly.
Close, basically at the prices at the previous day. So you had that big magnet price going on, with the volume from the previous day.
Man, right to
and
the
you
tick.
Have a ton of volume
17.75. Interesting. Yeah.
Yeah.
Right.
And so, I mean, it was just a great gap fill. You actually could have played it both ways. And then this morning, market opens up, comes down, going up to fill. And so we can play that gap fill, more than once. And it's pretty sweet. There's just, you can actually, because it'll oscillate around that settlement, especially after big moves like we had on Wednesday.
And
you'll see a lot of oscillation around settlement.
And since Darrell's been talking, folks, okay, that's what it's trying to do right now, which is pretty wild, watching this whole thing shake out. And we get gold down 32, And what you do have, this is important to understand if you're in the equities market, folks. So the spike that you had in gold, what nice spike, wide price spread, accelerated volume. But now what you're going to see is this. There's going to be a little avalanche of selling here, and the reason being is that people did chase it. Some of these gold stocks are up 10% in one day, and what you're going to see, folks, is that that money is getting destroyed today in a huge way, and they'll be forced out of the market. That's if you can learn anything out of that, do not chase them, man. You don't have to chase them, but that's going to happen. I can see it right now. Particularly, two different things end up happening. Of course, is that when you're in a loss that quick, that's a big loss within basically 12 hours, 12 trading hours, 24 hours, and these people will be going south, man. So.
Well, check this out right here too. We on Wednesday, we basically broke the mold on statistics on gold.
Okay.
And market ran up to it. Look at that. There's 3 deviations right there. Okay, ran right up to it.
Right.
Right up to the Fed funds rate. Obviously, just boom.
Yeah.
And then. It basically I didn't even touch gold on Thursday myself because I'm like, if you break the mold on a 3 deviation, you just don't touch it.
Yeah.
And so it was still sitting above 3 deviation based on settlement.
Interesting.
And so I did. It's not worth it. There's too much that's happened. Well, then you got new day, fresh start. Now you're on a normal thing, and we're right here at settlement. Look at this thing down to half a deviation, 0.71. Down to 1.5, and now we're pushing towards 2 at 1334.
Yeah.
3 deviations, which would be another mold-breaking day, which is completely possible after what's just happened, is 1317.5. That's actually the next target after we break through the 2 deviation mark there. That'd be a 9.7% of expected move would be down to 1317.5, which is very rare that we ever get. It's like 0.3% of the time we'll ever get there.
Interesting.
So, but isn't that sweet how it just nails the numbers? I mean, just perfectly. So.
No, it certainly is.
A lot of people see these and they think they're pivots, but they're not pivots. They're implied volatility based.
Right. So. Let's go to Lou in Nashville. Hey, Lou, what's going on?
Oh.
Yeah. How's it going?
It's going great, man. Thanks for calling. Thanks for holding. Appreciate it.
Yeah, I was just wondering where the buy may be in natural gas.
Natural gas. Okay, so let's take a look at this baby. It's not right now, I can tell you that. Okay, so let's take a look at this. So what you had yesterday, folks, we got Dave from Clearwater. I think he's shot. He was looking on the shot side. He had been shot. There was a spike out there. Right now, we are at 367. And you're coming back with light volume, down 47 ticks. But, what we did have is that, like, when Darrell was talking at the beginning of the program, and if you want to see, natural gas, folks, you're going to love this. A penny on natural gas, folks, is $10,000. So this move of 48 ticks is $480, and you're only putting up $2,300. So first off, you want to be cognizant of those moves, okay, and what it can do to the price in about 2 seconds. Now, my take, Lou, is that it's gonna try to get into somewhere around the 350 mark.
Right.
And I just sit there and wait until you get in there. It's had an extraordinary move, and I'm with Andy that this is going to go a lot higher. I mean, I think this thing wants to go to 440 or something. There's no two ways. Well, that's what I think. Okay. And the reason being, folks, is that when you came off that bottom, you came off with a wide price spread. It broke the downtrend, and this downtrend in gas, folks, has been dramatic. I mean, you're talking about a downtrend that's been on since 5 years. So natural gas used to be $9. You're down to 360. And are you going the futures market? Are you doing the UNG? What are you doing, Lou?
Yeah, futures calls.
Okay, so just have patience, man. What normally happens is that natural gas, that'll take a good, I think, another 3 or 4 weeks to get down into that level, man. But that's where I think we're going. And that would probably, so what you do have is this, is that you can't expect any huge accelerations up because of hurricanes, because right now, folks, in the Gulf of Mexico, we only have about, you get about 2.5 to 3 weeks left. Because what does happen, you can get some big blown hurricanes in the Gulf, the last week of September and the first couple weeks of October, because the water is still hot enough where we are that if the wind comes in, you know, everything gets picked up in the Gulf. And if that does happen, yeah, you can get that spike because that's where all the natural gas is. I don't see it technically in that market. So once you get beyond that, that takes that equation out of it. Then the next equation on a fundamental basis is like, okay, you know, how cold is it going to be like where you are? You know what I'm saying? In the winter, you know. So I just have some patience, man.
Okay.
Okay, man. Have a great one. Have a safe one.
Great. Thank you.
And don't forget, you can trade natural gas on Nadex at $1 a tick instead of $10 a tick.
That's amazing, man. I'm going to try that. I haven't traded natural gas there yet, but I'm going to. I love trading natural gas, man. What happens, folks, with natural gas is that I'm going to be over there trading that, man. Because this is what ends up happening, folks, is that it's absolutely amazing. I mean, how fast it can move. Now, that's great.
It's scary to trade on the futures.
That's great when it's there, you know. Well, you know what the amazing part about it is that, and I know there's a couple other tigers in the den that traded too. Now, we were used to trading it, but the margins, folks, for natural gas was, you know, even, you know, $7 or $8 was $10,000 a contract. You're down to $2,300 a contract. It's like, you got to be kidding me. But that $2,300, just so you understand the futures market, you can lose that in one day. So it's like
easy.
Yeah. It's not,
especially on natural gas.
No, totally.
What was it yesterday? It moved, let's see, 678 to 817, like high to low.
In fact, I got to look at something. Andy gave me a sugar trade last night. I got to look at this sugar trade. Let me pull
sugar.
Yeah, this sugar baby is 1786. Oh, I like this sugar trade.
Nico will get you on that sugar, man.
I should have put this on already. This is a yeah. He gave me this nice sugar trade, man. This thing is already gonna. Yes, if I put that on at the open, I would have. This is a nice trade. It's still not too late. Okay, so it's not just a buy, folks. I'll let Andy walk you through it. It's a nice trade, though. Look at this gold, man. I'll tell you, man, gold and silver blow my mind on Fridays. So watch this, folks. Let's go over to this for a second.
What is up with gold and Fridays, by the way?
What happens is this.
You're the gold master here.
At 1:30 Eastern time, right, the pit closes.
Right.
And then nothing, that means you really can't move large product, okay, until Sunday night. Now, that's problematic. Why? Because no one wants to be stuck with gold. So if you have gold on an uptrend, normally it's okay coming into a Friday, but gold on a downtrend, it's a big problem. You know, now that's in the futures market, the whole ball of wax. We had a gold company that we used to buy a lot of gold and sell a lot of gold, and we basically took that down kind of at the high of the market. I said to Steve that, no, I'm done with it, because I felt gold was pulling back, and we pulled back at the perfect time, thank God. But I'll tell you what would happen there. So what would happen there is that on a Friday afternoon, me and Steve would say, okay, listen, do you really want to sit on this type of gold? And no one, folks, in the gold market, let me tell you something, no one in the physical gold market sits on anything over the weekend. Okay? There's no way you're going to go home because your spread is not big enough. People think spreads in the gold market are big. Your spreads are minimal. You can wipe out your spread in about 2 seconds flat. So what happens is that everyone wants to sell, and it's always who are you going to sell to? And what else ends up happening, folks, is that you're always selling to one of the big banks, basically. That's where the sell comes in. You know, so that's the problem. No, it's a hot potato over the weekend. You know, if you're holding gold, man, you know what I mean? It's like you don't know what that's going to be worth Sunday night. So.
Yeah, well, and after that big run, you made all that money. It's time. I mean, there's a lot of people getting rid of stuff all day long yesterday.
Yeah,
and you're seeing it today.
Well, and this is going to be problematic coming into the close. I can see it with the equities right now. Darrell Martin, Tom O'Brien, you stay right there, folks. We'll come right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in 1 loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. And don't forget, folks, each and every day, live content, 9 in the morning to 6 in the afternoon right here at TFNN. You get all that live content right on your cell phone. All you have to do on your cell phone in your browser, put TFNN.mobi. If you want to see the Tiger TV, put TFNN.com, and then just go to the right-hand side, hit the little box with devices on it. Our service will know what device you're on, and you can get Tiger TV right there. Now, as you're over there at TFNN, what you're going to see on the right-hand side, you're going to see the daily market video. This is a market video that John Logan does for us. It's an incredible market video. Every day it's a little bit different, folks, and it's free. Okay, so check it out. Some days, you know, you have the currencies. Some days he's doing commodities, and some days he's doing indices. But check it out, and you'll get to see how he looks at the market. He's using Market Profile, which is pretty cool. We're talking with our man, Mr. Darrell Martin, and we're looking at the 3 deviation move that gold did, and looks like it's going to give up the 3 deviation move also, man. You talk about a personality, right?
We're breaking 2 now.
It is breaking. No, it's a Friday break, man.
I know. I mean, it's just like sell. You know, I mean, I'd be loving to hear the COMEX pit right now.
Well, and what happens, and this is the key there, folks. There's not see what you're seeing is 2 different things now that happen. What you're seeing is that you see the expansion up, and people think that, oh no, it's going, and then they get in. And when the pullback is just quick and you get a Friday simultaneously, it's like, oh man, you got to be kidding me. So we'll see.
This is one of those things to write in your journal, by the way. One of the things I always like to bring up to traders when you see things happen.
Right.
Okay.
Right.
And write it down because you'll remember it. And it sounds stupid. Write it down. Okay. Microsoft Word, great program. Okay.
Right.
You don't have to have anything fancy.
Right.
And I use a program called Jing, Jing.
Okay.
You can get it free from TechSmith.
Okay.
And it's really cool. It lets you take a screenshot and like write all over the screenshot, draw on it, put arrows, whatever. Okay?
Nice.
And so I can go on my charts, I can put little notes and screenshots, I can highlight areas. And that saves me from having to write a whole lot. I can write a quick summary. Today was an FOMC day.
Yes.
Gold was pretty flat before it.
Right.
It broke up 3 deviations. I then noticed the following day that it was completely choppy. So I may want to use caution in trading gold the day after an FOMC day on a big move.
Right.
The following day being a Friday, I saw a big drop, and I want to look for that potential opportunity. Next time there's an FOMC and we have a big move followed by a choppy day, expect a very high potential, reversal in the opposite direction.
Right.
So that way, when FOMC comes up, you can go in, you can do a little search in Word on FOMC, okay, in your own journal.
Yes.
You'll see this, and you're like, oh, that might be a good trading opportunity for a trading plan next time the FOMC announcement comes out.
And it's huge. What you're saying is absolutely huge, because what happens, folks, is this, and this is where that when you really are in the market, you have money in the market on a continual basis, that you'll, number one, pay more attention to it, and number two different things end up happening. You won't chase markets. You'll have the patience, and the reason being is that technically I can basically teach people just about everything. These cycles, like what you're seeing out here today, this really can't be taught. What happens is that you have to see these a few times, okay? And then you understand that, so the common sense kind of goes like this too. What happens is that when you get a spike up and then you get a breakdown, you got to understand all that money's being lost. So now you're talking about fear and greed, okay? Now, and that's very hard to teach. But if you're into it and you see it, then, as Darrell says, if you write that down, that's what's going on right here, right now. This has nothing to do with the price of gold. It has nothing to do with the price of the dollar. It has everything to do with, it's a breakdown, it's fear and greed. Now, you stay right there. We got our man, Mr. Basil Chapman, coming up next, and then we got Paige and Nico keeping you healthy, and Darrell's going to be coming right back. Have a great one. Have a safe one, folks. Thanks, Darrell. Appreciate it, man.
Good show.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.